let's talk about some different alternative asset classes, if you will, inside of or outside of multifamily that you can maybe add to your multifamily portfolio. So first off, let's kind of first cover this first topic here, which you can see on your screen is what are the top 3 assets that do really well in a strong economy and also do really well in a down economy. So obviously, we're talking about, we're on this webinar, which is the Multifamily Investor Nation, right? And so obviously one of them has to be multifamily, right? Which is why we love multifamily investing so much, and it's why we invest in this particular asset class. So one of the top ones is multifamily, because when there is some sort of an economic recession, people still need to put food on their table. So that's one of the very first things that they do is they put food on the table. And then the very next thing that they do is they're going to pay for the housing over their head, right? So they have to be able to live and survive. So they're going to feed themselves, and then they want to have a house or a roof over their head. So they're going to make sure that they pay for their housing. And so that's one of the reasons why multifamily is such a recession-resistant asset class. If you go back to 2008 and the last financial crisis that we had here in the States, one of the things that we always look at is the historical occupancy levels of asset classes across the board, and multifamily fared very well. And across all the asset classes, so class A, B, C, and D, there's only about a 30 to 40 basis drop across each one of those different occupancy levels of those different assets. So there was not a significant change in occupancy on each one of those assets. Now, one of the things you did see is that there wasn't a lot of rent growth during those times, right? You didn't see a bunch of rent growth that we're seeing right now happening in the financial crisis. It usually stayed pretty stagnant, and maybe a drop in certain asset classes to be able to make sure that they filled up their particular units or their particular property. So multifamily is definitely one of the number ones. I kind of lean towards it being the number one at passiveinvesting.com. It is our number one holding that we have is multifamily. The other two, I want to see if some of you who are watching, we have quite a few of you on here watching. For those of you who are watching, why don't you just type into the chat box real quick and let me know what you think the other 2 top asset classes are that do really well in any type of economic recession, right? So if you look back at 2008, what are some other asset classes that you might think that did really good in that down economy, but are also doing really well right now? Anybody have any thoughts on that? Storage units. I see storage. I'll read these to you as I see them. Storage and grocery, mobile home parks, storage and car washes, mobile homes. So everybody on here is pretty much leaning towards storage units, and a couple of the different kind of things mixed in there. And storage units is definitely one of the top 3 that does really well in a strong economy and a down economy. And here's the reason why. So whenever there is a down economy, people are downsizing, right? But they don't want to get rid of all of the stuff that they acquired and accumulated when they were doing really well. So they stick all their stuff inside of a storage unit so that they don't have to get rid of their stuff, right? And then, of course, in a really good and a really strong economy, people are buying a bunch of stuff and they need a place to store it. And so they use storage to be able to do that. So storage does really well in a good economy as well as a down economy. And then the third one, actually Dan on here just mentioned the third one, which is actually liquor stores or alcohol. Alcohol always does really well in a good economy and a bad economy, right? Because when they're in a strong economy, you're celebrating and they're imbibing, and when there's a down economy, they're trying to drink their woes away, if you will, right? And so all 3 of those are really the top 3 asset classes that do really well in a strong economy as well as in a down economy, right? So there's also some other asset classes that, of course, we at passiveinvesting.com think are really great and really, really good. Obviously, we are now going into the express car wash space. So I know Ben on here mentioned car washes. Car washes do well. There's not enough history or data available to kind of go back to 2008 or even before that to see how well across the board did all of these car washes do. But for the price point of where we are with car washes. So, you might have a $20 to $25 a month membership with an express car wash location. When I talk about express car washes, I'm talking about the kind of car washes that you see where you go through, you go to the pay station. It's all kind of a manual process for yourself, or an automated process. You go through the manual pay station, you put it in your credit card, you have your monthly membership, it has a license plate reader or an RFID chip that's being read that recognizes you're a member. The arm opens up, it lets you in, you go into the actual tunnel itself, you put it in neutral, hands off the wheel, it pulls you through the tunnel, 100 to 160 foot tunnel, where it's actually going to be washing your car. And then at the other end, you go through and you can get out and you can vacuum your own vehicle into free vacuum stations, right? And so these are becoming more and more popular, and they're going to continue to become more and more popular over the next 15, 20, 25, 30 years from now, as more and more people come into the United States, more cars are being made, and more people are on the road driving. There's going to be more and more demand for these types of assets. And there's still a lot of locations around the country that don't have these as an option for these express car washes. And so it's an asset that we've been looking at for going on about 2 years now, to really add to our portfolio. And we have just recently added it to our portfolio. We have 2 assets that we just recently acquired in Fayetteville, North Carolina, and Lumberton, North Carolina, and then another one that, or we have another portfolio of 7 locations right here in Columbia, South Carolina, that we have under contract. And right now we're these 2 investments that we have already released to our investors filled up within hours, and so they are completely full. There's tons of backup, and there's not enough availability for anybody. So I'm not trying to pitch you on investing with us. I'm just sharing with you about the kind of demand from our investors that we've had for these alternative assets to be able to add to their portfolio of multifamily assets. The nice thing about the car wash space is that it does have higher cash flows. So on these investments, we offered a 10% preferred return, and then participation with the upside over and above that. And the projected returns are north of 25% on some of these assets that we're putting together with car washes. So it gives an ability to have a higher potential back-end exit for these on the projections, which I think it's going to do even better than that. I think it'll probably go 30, 35% on these, maybe even hitting home runs at 40 and 50%, because of our management style of being able to acquire these washes. We actually are vertically integrated in the car wash space. We own our own property management company for car washes, so we can have some more control and oversight on that. We have a great team that's supporting us in that space, and we're already seeing tremendous growth even in these washes that we have just recently acquired. And so it's going to be exciting to see how that portfolio continues to grow and continues to perform. And there's also potential for kind of some exits later on once we get to 100, 150 locations, to be able to have some sort of private equity roll-up play or something similar to that. So it's very interesting to kind of see all these different assets that are available. Obviously, hotels are another asset. They don't necessarily do really well in a down economy, but it's still a good asset to be in, to have some diversification in your portfolio. And then medical office buildings are another asset class that we've looked at. I know somebody mentioned in here mobile home parks. We stay away from mobile home parks. We don't like them. They do tend to have higher cash flows during the hold period, but they have lower back end exits on mobile home parks. So we typically stay away from those. But it is something that I know quite a few people do invest in that, and they're more kind of a longer term hold strategy. So they're going to hold on to them for 20, 30, 40 years. They're just really wanting that cash flows that are spun off of them really than they are looking for the higher appreciation on the back end. And our group really looks for assets that can have really nice cash flows during the hold period, and then some nice pops on the back end when we go to sell the assets as well. Now, there's a couple of things that you have to do to be able to figure out whether or not your investors want to see some of these different assets, right? So if you're a passive investor, obviously, it'd be kind of odd if a group all of a sudden just sent you a deal after they've been doing multifamily for 3 years, just all of a sudden sent you to a deal to invest inside of a car wash, right? And I'm going to give you one other asset class that we are in the process of putting together right now that is, I wouldn't necessarily call it a hard asset, but kind of technically it is. But we'll talk about that in just a little bit towards the end of the webinar today. But it'd be kind of odd if all of a sudden an operator that you've been working with for a couple of years just all of a sudden sends you a deal for an express car wash, right? You'd be kind of like, wait a minute, what is this about, without having some sort of like pre-information or pre-knowledge, if you will. And so one of the things that is important is for you to set up is to make sure that you have some form of communication that has been built out with investors. So if you're a passive investor, obviously, hopefully your operators that you're dealing with are communicating with you, whether either via email or like we actually have a physical printed newsletter that we mail out to our investors, and that's what you can see here. This is a physical printed newsletter, and you can see inside of here we give information about what's happening, right, at our group, passiveinvesting.com. These are very high quality, very well done and designed and printed, and this gives us an opportunity to write articles to our investors to inform them about some future things that we're thinking about doing. So before we released our very first car wash investment, we wrote an article in our newsletter and informed our investors and told them, hey, we wanted to share with you some of our thoughts on this different asset class and why we are moving in a direction to be able to add this to our portfolio. We would recommend you adding it to yours as well. And then we're able to basically prime our investors and inform them ahead of time of what's to come, right? That way they're not blindsided out of the blue about this new express car wash investment. And so on a monthly basis, we send out this physical printed newsletter. It's usually about 16 pages long and full gloss, as you can see here. And usually one of our managing partners or two of them will write an article in here about something that they're working on. And then we also have some of our other team members that are on our team that will write on various topics that we feel like our passive investors would be interested in learning more about. And then one of the other things we do in this newsletter is we include this, which is a coloring sheet. And this coloring sheet is basically the cover of the magazine, the cover of the newsletter, and we put it into a coloring sheet format to involve the family, to get the family unit involved. And so, we have a lot of our investors that look for this newsletter every month, and their kids run to them asking for the coloring sheet that is in here, so we can include the family in the things that we're doing. Plus, it also creates a conversation piece for people that are coming over to their house, because on here you can see we have our branding on there. I don't know how easy it is. You can see that, but we do have our branding on this sheet. And so as their kids are coloring this, they're going to, of course, do what with it? They're going to take it and they're going to stick it on their refrigerator, and it'll be a conversation piece for people that they invite over to their house and see what's on their refrigerator, if you will. So that's one way that we stay in communication with our investors. That's how we gauge the level of interest from our investors. And so my recommendation is to have something in place like a physical newsletter. We like the physical newsletter because it allows us to make sure our investors are receiving our communications. And when we send out this newsletter, or when we have our initial phone calls with investors, we're asking them for their physical mailing address. We can start to send them some information in the mail. And then that also gives us an opportunity to be able to send them. I'm going to slide over here behind my desk here. It gives us the opportunity to be able to send them new offerings that we have available. So you can see right here, this is a offering that we sent out to our investors. It's a full gloss kind of like booklet format of a new investment that we have available for them to review. Has market information, the business plan, the pro forma, the projections, our track record, our history, also some more information about our team and how we're going to support their investment. And so all of this is information that we get to send to our investors in the mail to so on a regular monthly basis, we're sending the newsletter, and then whenever we have deals available, we send them the investment offer memorandums printed out and sent out to them so they can have that to be able to review physically in their hands. Because we had about I would say we were right at about 52, or even right now we're about 52 to 53% open rate on our emails, which if you know anything about email marketing, it's a phenomenal open rate. But we just felt like there was still almost 50% of our investors not receiving or not opening our emails. But being able to send them something like this on a monthly basis, and of course this, whenever we have a deal, pretty much ensures almost 100% open rate, because they're going to get it in the mail, and we send it to them physically, and we send it to them. We send them this, in a priority mail envelope. So it's not going to be just a first class envelope. It's a priority mail envelope. We want to make sure they get this in a timely fashion within 1 to 3 days. And then this right here is our first class mailer that gets sent out in a white envelope. And it usually gets to them within about, probably 1 to 5 business days, somewhere around in there. But we also want it to be able to stand out. So I actually have a couple of items of mail that got returned to us, and so you can kind of see this. I'll cover the name up for anything on here, but you can see this is the envelope we send for our newsletter, and it's just a regular white envelope. But when we mail it to our investors, we're sending out this. So it's an express envelope mail, if you will, and this express envelope is going to be something that stands out to them, right? It's going to stand out. It's going to seem more important. And we want to make sure that they open up these investment offering memorandums ASAP instead of waiting to open it up like they might do with the monthly newsletter whenever they have time to be able to review it. So that's all the information I have for today. Are there any questions before I wrap things up about this particular topic? And while you guys are thinking about something, if you have something, I wanted to share with you about our webinar for next week. You're going to be hearing from Brandon Abbott, one of our other managing partners, and he's going to be talking about building a solid reputation within the apartment and syndication industry. So improving your reputation through words and actions, which speaks louder, how to stand out in the crowd, how to maintain your standing, and so much more. So this is a topic that is missed quite often and sometimes is not focused on enough. And so being able to have a focus on this and building a solid reputation, I think, is truly what has allowed PassiveInvesting.com to be able to stand out from the crowd and be able to be an industry leader in the space of multifamily. So make sure that you don't miss that. You can go ahead and register for that by going to multifamilyinvestornation.com/MFIN webinar. You can register for that for next week. Well, there's no more questions here, so I appreciate you guys jumping on. Hope you guys have a great rest of your week, and we look forward to seeing you at MFINCon in June 23rd, 24th, and 25th. You'll be able to meet me and our entire team in person, as well as our celebrity speakers, and then the 40 or 50 other speakers that we're going to have there at this 3-day event. So it's going to be live in person there in Charlotte at the Charlotte Convention Center. We're working behind the scenes every day to make sure that event is a great event for you, and hope you guys have a great rest of your week.